Why don't we circle back to some conversations that Tom and I had on Sunday night, Tom? We had the bank earnings today, of course, and they looked pretty good at the top line. Kudos to you for your call that Q2 earnings would be strong given the regulatory environment that we've seen here. There's not much movement here on the other side of this, but I suppose the question is, Tom, if you didn't like going into the bank earnings with earnings trades on because of the volatility environment, do you find yourself looking at this particular set of stocks now with a different light on the other side of their releases?
I think we're, I think we're getting to the point where I don't think this earnings cycle is going to be here. There's two challenges with this earnings cycle. One is the fact that the market's already at such a high level that it's going to be very difficult for this earnings cycle to surprise to the upside.
Just because of where the market is.
Just because of where the market is.
Right. Like he's not saying the stocks can't go higher, but the expected move is $10. They go higher by 3, not 13.
Yeah, I don't like. It's very difficult for me to think about earnings in too broad a sense. I think about earnings relative to where the market is, and when I feel like the market is cheap, and volatility is high, I think earnings are interesting to me. I feel like when the market is expensive and volatility is low, earnings are very challenging. And I look more at the overall market. So we're playing the overall market here a little bit to the downside, but we're not really playing earnings. If that makes sense.
Not really playing earnings. No, that makes a good deal of sense. I mean, some of these names, JP Morgan had an IVR of 16 coming into this week. So
yeah,
it's
Goldman
not like there's
Sachs.
a ton of opportunity there.
Goldman Sachs is 17 tonight. There's not a hell of a lot here, is the bottom line.
Things aren't juicy.
Things are not juicy. Yeah.
They're not juicy in a lot of sectors. I mean, the sector ETF XLF has a 20.9 IVR, which isn't exactly high. Not the only news, obviously, in the corporate sector that's moving the markets today. Nvidia now being allowed to sell these chips overseas back to China, which is an interesting ploy. We're going to tariff our allies and sell AI chips to China. More, obviously, to be told there. But Nvidia's gapping up to new all-time highs. Is this a buy the rumor, sell the news type of event?
No, it's a sell the rumor. It's
sell.
It's a sell. Yeah, you always look for, in cases like Nvidia and what else? AMD today.
Although it didn't work with UAL bringing the rest of the airline market up too.
UAL sold off pretty good. Actually.
UAL did, but the rest of the market stayed up.
UAL's 88. It got up to like 95, so it actually did.
But not the rest of the market. I said the rest of the market. It took the airlines up with the
I look at some of these stocks today and I'm thinking, well, AMD is probably a better sale than
Nvidia.
Earnings
are August 5th in AMD.
Yeah, you know what, Chris? You're
looking for something here.
We're digging deep right now. We're digging deep, and there's not much.
It feels that way.
Yeah, it really does. It feels like we're just digging deep. There's not a hell of a lot there.
So walk with me here. Let's say someone sees this Nvidia news. It's an IVR that's below 10. The stock's just gapping open to an all-time high. There's a contrarian out there who's saying, I've got to fade this move, right? I may not be that person, but someone out there is. How does one structure a trade in this environment where you say you're having to dig deep to find something?
When we get into situations like this kind of market, we have a tendency to lean more towards some of the bigger indexes and ETFs that we don't trade nearly as much when IV is higher. So from a directional standpoint, like this is the first time I've gotten short S&Ps and NASDAQ using indexes in a while. So I think that's one thing. I think the other thing there's one thing that we've learned over the last, decade and a half of doing Tasty is that, like Tony said to me this morning, he goes, what do you have on Nvidia? I go, nothing. What do you have on AMD? I go, nothing, because IV ranked was in single digits. And I'm finally paying attention. It's taken me a decade to trust the research, but when the IV rank gets super low, I get out of those positions, and it saved me a lot of money from not like
a lot of aggravation too.
Yeah, listen, Nvidia is the most liquid, the most actively traded stock. Nvidia and Tesla are like 1 and 2. And so for me not to have a core position in Nvidia and Tesla, it's really weird. But I don't because the IV rank's so low.
Yeah.
And it's taken me a long time to
Tesla's
get there.
15 now.
That doesn't mean I'm not going to trade today. We're trading a little bit. We'll end up making, close to 40 or 50 trades at least. So I'll figure it out. I'll get some stuff going. But I just haven't figured out kind of, yet so far today, how aggressive I want to be on the short side. I'm not buying them here.
Yeah, it's important to have those technical rules or mechanical rules, if you will. I have a technical rule that I follow, which is to say that when the S&P 500 is more than 3% above its 1 month average, you typically get a weak stall, as in like 6 days of the market stalling out. And that's been the case since the low in October 22. So consistent with that, if I want to stay long and I'm at like 22 DTE and we're 3% above our 1 month moving average, is that the time for me to roll into the position? Or do I take a step back and say, you know what? Let me see how this settles over the next few days. I like to take a step back, and you may miss some things, but the market will be open tomorrow. Speaking of, yeah, go ahead.
I think that's completely reasonable. We rarely step back to review things because I think then you get into the case where you're either not trusting your instincts or. Trading is very...
Or your knowledge of the strategy or something.
Yeah, trading is very impulsive. And so we rarely step back to think about things, but we will back off we won't step back to look at things, but we will back off based on a lack of opportunity. That's how I think there's a difference there. It may not sound like it's much, but we'll never say, hey, you know what, I want to think about this. That's not what we do. But we will step back and say, hey, you know what? I just don't like, it's not that interesting to me.
Well, what's been really interesting this week has been the movement in crypto. Bitcoin flashed up towards 123,000 before coming back in here today.
Yeah.
It's been in the futures market 117, 118K again. It's also Crypto Week in Washington, D.C. There are 3 bills that are currently being reviewed to be passed: the Genius Act, the Digital Asset Market Clarity Act, and the Anti-CBDC Surveillance State Act. Is this a buy the rumor, sell the news type of week in crypto? We know that Ethereum's more than doubled since the April lows. Are we seeing a top here, guys, in your experience?
I think we're seeing, I think we are seeing kind of a top building in crypto. It's a little early to say, but there's just too much good. There's, tape action's good. You're starting to see a little bit of maybe a few cracks in some of the stocks. Not even much though.
What crack? Where's the crack? What's the crack?
I don't know.
But they're not up 20. They're only up 12.
Yeah, exactly. I don't know. Actually,
I'm trying to see it too. Volatility is, basically unchanged.
Yeah, you know what? I'm going to take that back. Forget about the cracks in crypto. In crypto stocks, I just think we have gotten to the point where it's fully priced. Doesn't mean it can't go higher. It just feels like it's fully priced.
Well, pretty complacent here.
I feel like crypto's in for a rude awakening, just based on price.
Some of the stocks, Riot, for example, this guy couldn't get back to all-time highs. And as you have more of these players coming into the space, there's just a fractionalization of indirect exposure to Bitcoin. So Ethereum's doubled. Bitcoin is up at new all-time highs, and some of these stocks can't get there. There's a lot of copycats in the arena right now.
I haven't traded Riot. I haven't traded Riot in forever. I thought I traded once at $70, $12. I haven't traded. Yeah, we haven't.
If I wanted to be bearish on crypto, I would look into the equity names as opposed to Bitcoin itself.
Yeah, I agree with you. You can't trade. You can't do anything in Bitcoin. But yeah, I agree with you.
Plenty to do in Bitcoin. You can buy it. You can buy more of it. You can keep buying more of it.
Right. You can trade Bitcoin futures, though. You could trade those two-sided.
Not really.
Big product.
You can trade the micros.
It's a big product.
You can trade the micros a little. Mm-hmm. The markets there stink too.
Agreed.
You're better off just shorting IBIT if you want to get short Bitcoin.
Yeah.
You know what? It's not the word. Here, you know what? Screw it. Why am I just talking? You can't talk about this. Oh, it's down 90 cents today.
Oh yeah, I'm not having fun in IBIT today. It's not a great.
It down 90 cents after being up $7 in 7 days.
Yeah, it's moving in the wrong direction today.
Yeah, you're right. It traded as high as almost 70, 69.5 at 67.25. So yeah, it's a little. Buying bonds.
Yeah, Tony, it was your birthday last week. It's my birthday this week. I want my $75 IBIT calls to print. That's not a lot to ask for.
Not a lot to ask for. You're right.
$6 expected move in there. In IBIT, stocks trading 67. We'll sell the 73s. Markets
are great in IBIT. I mean, they're penny wide.
They're really nice.
Yeah, they're not bad. All right.
2 cents.
They're tight, liquid, deep.
I'm working it, boss.
See that? You came up with a trade idea. That's why you come on a show. You're good.
I mean, yeah, sure. Came up with a trade idea, Mr. Vecchio.
And you made him buy bonds.
Blind squirrel finds a nut.
I'm selling some calls in IBIT. I just did buy some bonds at 22.
Don't put that on me.
I didn't think I would get a chance to buy them down in the day. Well, I don't know why I didn't think that, because they're down every day. But yeah, I do not like the tape action in the notes today. They look like they're going under 10. I don't like the tape action of the bonds. Neither one of those markets. That is going to put a absolute lid on this market eventually.
Mm-hmm. Eventually.
Yeah, that's funny that you say that, because my operating view right now is I'm going to be a silly bull in stocks until the 30-year crosses 5%. And once we get above 5% at the long end, that's when stocks probably start to have a problem with things. Like, you can't ignore the bond market forever. We're getting close.
You know, I mean, we've been watching the bonds slowly drop.
Deteriorate?
Deteriorate. I don't know that there's a story here yet. I really don't.
Not yet.
You're off your default thing?
What?
You're off your default thing that
I'm
you wrote
hoping
about?
we don't default. Not off my default thing.
Well, you would be bearish on bonds if you were thinking of that anyway.
Well, obviously.
Right. Oh, well, I mean,
I don't think
it's not so obvious, because after you wrote that in the cherry bomb, I was getting the emails, is that why he's long bonds? And I was saying, no, if he really felt that. I mean, I know you think the risk is greater now because it's.
I'm pointing out outlier risks to people because I think it's interesting to talk about it. The 10-year credit default swap is almost 4% right now in U.S. markets. The 1 year is over 60 basis points. I find that to be very interesting because the U.S. doesn't default on treasuries, but the 1 year treasury is trading for, the 1 year credit default is trading for 60 basis points. You know, like I mentioned in my cherry bomb, there's 60 basis points sitting on the floor if you want to pick it up.
Nobody wants to make it 50 basis points by whacking the bid or anything like that. That's what I'm trying to say.
Well, the 10-year, which I would never sell, is trading for, you know, almost 400 basis points.
Yeah.
When you think about that, you know, we haven't defaulted ever, basically. And so.
Seems like free money, or somebody's got some explaining to do.
Seems like free money, or somebody's got some explaining to do. Exactly. I mean,
the S&P is up 7-8 now, Sosnoff. Only true believers. Remember?
They know look good.
Look at how quickly you change.
They know look good. Yeah. Yeah. No, that's it.
Very good. All right, my friend. Anything else, my friend Chris? Are we good?
Yeah, next time, because I've been trying to ask this for the past 2 weeks, and it's my fault for not getting here, but in January and April, we've talked about how AI is changing and its influence in the finance world. We've seen that Claude or Anthropic just announced a new suite of finance-related tools. So I was hoping we could do another one of those check-ins, Tom, because your attitude did evolve in a more positive fashion between January and April. But I suppose that's a teaser for next week's show. We'll talk that next time.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.